What's going on YouTube? So in this video, I'm going to share with you 5 national banks that are still lending on investment properties, even though the rates have doubled and tripled in most areas. So if you have your first rental property that you're looking to purchase and you need financing on it, or maybe you have a current rental property right now that you're looking to refinance, you could use this list to shop around for the best possible rate and term. My name is Art Smith. Welcome to my channel. And on this channel, I love to help real estate investors finance rental property. So if you want to learn more about real estate finance, do me a favor and subscribe to the channel, because my goal is to help others build wealth, create financial freedom, and break generational curses so that they could start to invest into themselves as well as their families. Now, full disclaimer, all the banks that I'm going to be listing out here in this video are going to be originating full doc loans. So that means you're going to need the big 3. And that's going to be income, credit, as well as equity. Now, as far as income, what the banks want to see for these conforming full doc loans are going to be 2 years of job history, 2 years of work history. So they're going to ask for your W-2s, 2 years of them. They're going to ask for your tax returns, and they're also going to ask for your recent pay stubs to confirm that you still are making the same amount as you did last year and it's not descending as far as your income. And if you are a self-employed individual, or maybe you own your own business, then they're going to ask for either 1099s, a year-to-date profit and loss statement, and also compare that with last year's profit and loss statement. And they will be asking for your bank statements as well too, to confirm that you're still either making the same amount or you have steady regular deposits going into that bank account, as well as confirming all of your expenses via that bank account. So just be conscious of that. And as far as credit goes, you're going to want to walk into the bank with a credit score of 700 and above. Anything lower, you're just going to be paying more in the form of a higher interest rate and more at closing in the form of closing costs. So if you have a 600, 650, 680, do whatever you need to do in order to bump that credit score above 700, preferably 740 and above, so that you can get the best possible rate as well as the lowest closing cost that's associated with this loan. And also just be conscious that all applicants on a loan application is going to be considered when it comes to credit score. So banks like to use the middle lowest credit score out of either both or all applicants on a loan application. So if you are partnering with somebody who has a lower credit score, either take them off of the loan application, or what you could do is just help them build their credit score to above 700 so that all parties on the loan application can win and have the lowest possible interest rate and lowest closing costs when it comes to originating this loan. And when it comes to equity, or what we like to call it in the industry, loan to value, the more money that you put down, 20%, 30%, or maybe you own a property right now, so your equitable position is going to be the difference between your property value and what you owe on the property, any loans or liens against the property. That difference between that value and what you owe is going to be your equitable position. So either you're going to be putting down a large down payment, and that's going to lower your interest rate and lower your closing costs when originating these types of loans. Or again, if you own a property and you have a low loan amount in comparison to your value, that's going to give you the lowest possible interest rate and lowest closing costs when originating this loan. So just kind of be conscious of that. Your credit, your equity, as well as your income is going to be considered when originating these conforming full documentation loans that these national banks are going to be lending out. All right, so now let's finally get into the list of national banks that are lending on investment properties. All right, so the first bank here on the list is going to be Chase JP Morgan. Now, I'm pretty sure you've heard of Chase before. If you haven't, definitely check them out, because they are the #1 bank here in the United States, and they have a wide variety of products to choose from, including investment property loans. Now, the minimum loan amount for Chase JP Morgan is going to be $50,000 as far as a loan amount, and that's going to be stretched out and amortized for as long as 30 years. Now, the minimum down payment requirement for Chase is going to be 15%, and if you own a property and you're looking to pull some cash out, then they'll go as high as 75% loan to value ratio. Now, if you are a little confused as far as what the loan to value ratio is or how to calculate a loan to value ratio, here's an example. So let's just say if you have a property right now that appraises for $100,000 and you want to take out some cash of that investment property, then they'll allow you to take out up to $75,000 on that home that appraises for $100,000. So let's just just say if you have a loan on the property right now for $35,000, then the difference between $75,000 and $35,000 is going to be $40,000. So that's what Chase will essentially cut you a check for after they pay off your existing loan of $35,000, because they'll give you the difference up to $75,000. Hopefully that makes sense. If it doesn't make sense, do me a favor and comment below, and I'll try and elaborate on loan to value ratio a little bit more on another video. Now, please keep in mind that Chase and other national banks, they don't typically lend in the second position. So if you are going to be doing a cash out refinance, just like I stated in the example, you are going to have to pay off the existing loan that you have on the property, that $35,000 loan on the property in this example. That's going to be paid off, and Chase will be in the first position for the full $75,000. And again, they'll cut you that check for $40,000. All right, so second on the list that we have is US Bank. Now, the cool thing about US Bank is that their loan amounts go a little bit lower than $50,000, which is kind of the standard for national banks. It's really about $75,000 as far as the national minimum loan amounts. But since things are a little bit different here in this economy, meaning we're not originating a lot of loans, or banks are not originating a lot of loans, then they're willing to drop their minimum loan amounts. And US Bank is willing to drop their loan amounts all the way down to $30,000. And the reason for this, the reason why they're able to do this and other banks are not either willing to or just don't have the capacity to do so, is because US Bank is willing to finance the lender fees that is associated with the closing costs when originating these types of loans. So US Bank is just really a winner for that. And if you already bank with US Bank, then that's going to be an easier, streamlined process for you. Now, the minimum down payment for US Bank is going to be 20% on purchases. So if you're looking to purchase an investment property, they're going to want to see you come into the deal with 20% or more as far as a down payment. And if you're looking to pull some cash out with US Bank, then they will go up to 75% loan to value ratio. And again, if you need a reference as far as how to understand loan to value ratio, just going to rewind the video and reference the example that I used with Chase Bank. Now, again, they'll loan up to 75% of your home home's value. So that's going to be very, very good in today's market and for a national bank. Now, if you like the idea of using either Chase or US Bank for a investment property loan, I'll link the website directly to their products here in the description box below. Okay, and for these last three banks, I'm going to go through them pretty quickly just because they kind of have all of the same guidelines that pertain to loan to value ratio for cash out refinances and down payment requirements for purchases. So I'll go through them very quickly. And if you have any questions about any of these banks, all five of the banks, just simply comment below. Now, the third bank on the list is going to be City National Bank. Now, City National Bank's minimum loan limit is going to be $50,000. And for their purchases, they're going to require 35% down on investment properties. And if you're looking to pull cash out with City National Bank, they'll allow you to go up to 55% loan to value ratio. And for the fourth bank on the list, we have Wells Fargo. Now, Wells Fargo's minimum loan limit is going to be $50,000, and they are going to follow suit with Chase as far as a minimum down payment of 15% on purchases and a loan to value ratio of 75%, and that's going to be a max loan to value ratio of 75% for a cash out refinance. And last on the list, we have PNC Bank. Now, PNC Bank's minimum loan amount is going to be $50,000. Their minimum down payment on purchases is going to be 20%, and their maximum loan to value ratio on cash out refinances is going to be 80%. All right, now that's the list of 5 national banks that are lending on investment properties. Now, please keep in mind that these are going to be the minimum guidelines at the time of me shooting this video today, and guidelines do change on an often reoccurring basis. So for most accurate information, you could either reference the comment section or maybe even the description box below. I'll update some of the information in the description box below, but for most accurate information, the best thing to do is pick up the phone and call the mortgage department at these respective banks directly and ask them what their minimum loan limits are, what their minimum requirements are as far as their down payments on purchases, and what their minimum requirements are for their cash out refinances as far as their loan to value ratio. Hopefully you found value in this video. Let me know if you have any questions. And if there's anything specifically that you want me to cover that pertains to real estate finances, I got your back. Let me know. Just simply comment below or just reach out to me privately. Other than that, thank you so much for watching yet another video. If you haven't done so already, do me a favor and subscribe to the channel, and I will catch you on the next one. Peace.